Welcome back to Ag Marketing IQ In Depth. Today we're going to chat with Brian Basting from Advanced Trading. He's always got some good information for us and tips for getting that margin a little wider than it is sometimes. Welcome, Brian.
Thanks, Pam. Always good to be with you.
So a lot of people are talking about this war we've got going on and the impact it's having on the markets, but we've got some other good, strong, fundamental news in our grain markets as well. Bring us up to speed on where you're seeing some of these nice rallies coming from.
We really have seen a good rebound here, Pam, in all markets. Let's start out with wheat. We're looking at the highest wheat prices now, Chicago futures I'm talking about, since last July. Now, that was fueled initially by some short covering by the managed money, speculative funds, if you will, on some concerns about dryness, not only here in the U.S., but scattered areas around the world. And that gave us some support back there in January and more so in February. And now that has really been ignited, for lack of a better word, by the conflict, obviously, the war with Iran that started here this past week. And so we're looking at wheat prices now spiking higher, again, to the highest levels we've seen this last summer. This is not a fundamentally driven rally, I'd add, though, Pam. It is strictly, for the time being, an uncertain, volatile market that's been driven by the war and the concern that staple goods such as wheat can be very explosive price-wise in this type of environment. We saw that 4 years ago, as all your viewers know, back in 2022 when Russia invaded Ukraine. I'm not saying this is a repeat of that. I don't want you to take that away, but I do want this to take away that we are looking at some steep rallies that are linked in part due to that uncertainty. We have ample supplies of wheat. So I would encourage producers to look at the new crop at this point, possibly at some pricing opportunities. You want to remain as flexible as possible out there, but some pricing opportunities. Switching gears, Pam, over into soybeans. Soybeans are at the highest levels now, Pam, since November. We had a post-harvest rally. There was a kind of a spike rally last fall as China came in and reached agreement with the U.S. to import about 12 million tons of old crop beans. Now that rally went away very quickly, though, in December and January, and we've clawed our way back very quickly now to those highs that were made in November. Some of that's due to the hope that China may come in here and buy some more U.S. beans. I believe the president is meeting with President Xi of China here in a summit that's set up here. Hopefully that summit will still take place, and it's uncertain whether anything will be done, but that was the hope of the market a little while back. Also, the undercurrent of the strength in the oil market, the crude oil market, has really been ignited here by the conflict, the war with Iran, and so we're seeing soybean oil market making contract highs daily now. And so that has supported the bean market too. So bean prices, highest prices since last November. Corn has kind of been the follower of the three so far, Pam. Highest prices we've seen since January 9th. It was the day before the January 12th extremely bearish USDA crop report. And we took 25 cents off corn in one day. The market has clawed its way back. And not all those rallies, not all that rebound has been made back yet, but we are at the highest prices since just before that report was released. But the corn has been fundamentally supported by a record export trend. First half of the crop year is now in the books, and we saw record exports from September through February. And we've got some hopes that exports will remain firm near term. I'd remind your viewers, though, that Brazil could be a competitor here and Argentina later this spring and summer. But that's kind of a backdrop of where prices are today, Pam.
And we'll take it. But for farmers, what should they be doing in this market? I know you're a fan of, tune out the noise. How do they set a path and move down that path in a profitable way?
You summarized that well. I think we really want to tune out the noise, and that can be challenging as a producer. But as a producer, what you want to do is focus on your strategy, your game plan, as it were, because you're going to be hit with news every single day now. And the war only adds to that noise as such, because the market is extremely volatile at the moment, highlighted again by the crude oil market. We're looking at some possible strategies to consider, Pam, would be an option strategy. A put option strategy allows you to set a floor for, in this case, for your expected production, for example, for wheat, or your expected new crop production for corn and beans, but leave that upside open. we do want to maximize this opportunity, whatever it's going to be, to the upside as growers of wheat, corn, and beans. We want to maximize this. But we also want to give ourselves a floor, and we want to manage price volatility. And we can do that with options. We can manage as the market, if the market were to continue to move higher, we can roll up that floor on the put option, maintain that floor, leave that upside open. We can do that with any remaining old crop bushels too. I'd remind your viewers, the bushels from corn, for example, are still in the bin from last fall's harvest. We can manage those bushels, but we really want to get a flow underneath these markets, Pam, because fundamentally one could argue that all three of these markets, corn, beans, and wheat, are bearish when we look ahead into 26, 27. But we all know that the markets are full of surprises. So we've got a pleasant surprise, as it were now, price-wise, with rebounds we've seen, highest prices in wheat since last summer, highest prices in beans since last fall, and highest prices in corn since early January. So we want to take advantage of those opportunities. But I do think another strategy might be to consider with new crop corn or beans, might be to do an HTA with your elevator there and simultaneously purchase a call option. But with those strategies, purchase a put option or the strategy I just described, this forward sale and the call, you're setting the floor but leaving the upside open, and you're managing price. You're not predicting price. You're not going to say this market's going to go here and I'm going to do something. You're actually setting the floor. And then if the market were to go higher, we certainly want to cheer for higher prices. All of us who are growers of crops want to cheer for higher prices. We can manage those higher prices by rolling up our options, for example.
Yeah. So to put it in a kind of a colloquial way, what I'm hearing is manage the risk and get while the getting's good.
Yeah, make hay while the sun shines, Pam, because
that's right.
It was looking pretty gloomy there for quite some time back in January and February. When you're looking at the wheat market was grinding down towards $5 bushel, beans were grinding down towards $10 bushel or below on cash. Corn was grinding down there towards barely over $4 cash in some cases. New crop was not there yet, and now all these prices have rebounded. We want to reward the market, but we also maintain flexibility. And as you said, take advantage while the getting's good. At least it's better than it was. We all would like to see markets higher, grower of crops. But we also got to recognize that the fundamentals are what they are. But fundamentals could change very soon, very quickly. Markets change, as your viewers all know, very quickly. But we do want to take advantage of opportunities, and we believe this is an opportunity for all three crops.
Sounds good, Brian. Let's get some of that grain out of the bins. We're glad to have you with us. As always, thank you for giving our farmers some opportunities to make a profit while the opportunity's there.
Thank you for the opportunity, Pam. Always enjoy visiting with you.
Always. Take care.
You too.